Hello everyone, welcome to EduTap and welcome to the Finance 360-degree sessions in which we cover the important and relevant finance current affairs, RBI notifications, RBI press releases, and in today's session I have brought for you two very important finance current affairs, two very important RBI press releases that we are going to discuss in today's session. So first of all, we have Digital Payment Index to discuss. So we will discuss the Reserve Bank of India Digital Payment Index, and you know that the RBI DPI, this is a very important index of the RBI. Why I am saying so? So these were the questions, or these are the memory based questions that have come in the RBI Grade B examination in 2024. That is, in just the previous RBI Grade B examination, there were multiple questions from the Digital Payment Index. Okay, so regarding the weightage, about the parameters, that what are the parameters, and regarding the weightage of the parameters, there was a question. Regarding the component or the sub parameter in the parameter, there was a question, and regarding the number also, or regarding the index also, there was a direct question. Okay, and how the index has increased, on what basis, regarding that there was the question. So you can see that in the RBI Grade B 2024, there were multiple questions from the Digital Payment Index and the Financial Inclusion Index, the Digital Payment Index. These indexes are very important from the RBI Grade B examination point of view, because they are always in the exam. And not only RBI Grade B examination, these are also important from the NABARD and SEBI, like not only for RBI Grade B but for the NABARD and SEBI Grade A examination also. These are very important, okay, because in the NABARD Grade A there was a direct descriptive question from the Financial Inclusion Index, and for the NABARD Grade A and SEBI Grade A also, this Digital Payment Index is also very important. Okay, so good morning everyone, welcome to the session. So we are going to discuss the RBI DPI in today's session, as well as we are going to discuss the RBI has formed a new advisory committee to evaluate the licenses for the Universal Bank and the Small Finance Bank. So what is this new advisory committee? Who is the chairman? For how many years this advisory committee will work? As well as what is this Universal Bank, the criteria, or we will understand some of the features of this Universal Bank and the Small Finance Bank. Okay, so all of this we are going to discuss in today's session, and this session is going to be important directly from the examination point of view, as you have seen that from the Digital Payment Index there were multiple questions that have come in the previous examination cycle, as well as the new advisory committee is also very important, and we will discuss about the Universal Banks and the Small Finance Banks also. Okay, so this is the idea. And these you can take a screenshot that such kind of questions have come in the RBI Grade B 2024 examination. Now, before starting with the session, before starting with the Reserve Bank of India Digital Payment Index, do subscribe to the YouTube channel of EduTap and join our Telegram channel to get the PDF of the session. So the PDF of the session you will get in the Telegram channel, and the link for the Telegram channel is given in the description box below. So good morning everyone, welcome to the session. So now starting with the RBI DPI for September 2024. First of all, the Reserve Bank of India Digital Payment Index, it is released biannually. That means in 1 year it is released twice. So for September 2024, for this 6-month time period that ended in September 2024, for this time period, the Digital Payment Index was released in January 2025, as well as now for the next, from September 2024 to March 2025, for the next 6 months, the Digital Payment Index will be released in July 2025. Okay, so remember that the Digital Payment Index is released twice in a year, once in January and once in July. Okay, and the Digital Payment Index is released for September and the March month, and they are released with the lag of 4 months. So September Digital Payment Index is released with the lag of 4 months, and it is released in January of the next year. And for the March Digital Payment Index for March is released with the lag of 4 months, that is, it is released in July. Okay, now if your examination is happening in July particularly, like the Digital Payment Index is released in the late July, 28th, 29th, 30th and such. Okay, so if your examination, the phase 1 is happening in the late July, then you can focus on the new digital payment index, or if the examination is happening after that, then you can focus on the new digital payment index. But if the examination happens in the first half of July, or even like before the new digital payment index is released, then this one will be important. That's why I have brought this for you, because if the examination happens before the late of July, then this digital payment index will be important. Okay, so RBI DPI for September 2024. Now the Reserve Bank of India has been publishing a composite Reserve Bank of India Digital Payment Index since January 1, 2021. So this Digital Payment Index, it shows us the extent of digitization of payments across the country, that how much penetration, how much deepening of the digital payments has happened. Okay, how much penetration and how much deepening of the digital payments has happened in our country, how far off the digital payments have reached in our country. So RBI has been publishing a composite RBI DPI, Reserve Bank of India Digital Payment Index, since January 1, 2021. Very important to remember when it was released, and it captures the extent, the RBI DPI captures the extent of digitization of payments across the country, that how many payments or how far the digital payments have penetrated. Okay, now there is the base year that is taken whenever an index is prepared. Usually there is a base year that is taken. So for RBI DPI, the base year that is taken is March 2018. So March 2018 is taken as the base year for the RBI DPI, and March 2018 value is considered 100. And against this value, all the other years and all the other half yearly values are compared to. Okay, so the September 2024 or the March 2025 value will be compared against the March 2018 base value, that is 100. Okay, or all the years value or all the half yearly values are compared against the value 100 of March 2018. So March 2018 is the base year, and the value taken in March 2018 is 100. Okay, now coming to the next point, that the index for September 2024 stands at 465.33 as against 445.5 for March 2024. So you can understand that from 100 value that was taken for the base year in March 2018, there is the growth that has happened of the digital payments, and by September 2024, the digital payment index stands at 465.33. That is way higher than the 100 value of the index in the base year. As well as if we compare with the previous digital payment index of March 2024, then also there is the improvement that has happened in the digital payment index value. From March 2024 to September 2024, there is the increase in the digital payment index value. So that shows that the digital payments are further increasing, their penetration and deepening is further increasing in our country. Now digital payments across the country registered and 11.11% year-on-year rise. That means from September 2023 to September 2024, there is year-on-year growth that has happened of the digital payments, that is by 11.11%. So digital payments across the country registered an 11% year-on-year rise as on September 2024. So from September 2023 to September 2024, there is the increase of digital payments by 11% according to RBI's index that measures the adoption of online transactions, the digital transactions. Any confusion anyone has till now? Everything clear? So the RBI DPI, that is Digital Payment Index, comprises of 5 broad parameters. So Digital Payment Index, it is prepared with the help of 5 broad parameters that enable the measurement of the deepening and penetration of digital payments in the country over different time periods. Okay, and Digital Payment Index is calculated twice in a year, and it is released in January of every year and July of every year for the September and March month. Okay, so for the September, in the next July, in the next Jan, there is the release of the Digital Payment Index, and for the March, the release of the Digital Payment Index is in July. Okay, so this is the idea. Now, what are the 5 broad parameters that enable the measurement of the deepening and penetration of digital payments? That is your payment enablers, the payment infrastructure demand side, payment infrastructure supply side, payment performance and consumer centricity. Now the sub parameters are also very important, because in the previous year there was a direct question on the sub parameters. So payment enablers, how you are enabled to do the payment. You must have mobile phone, you must have some bank account, you must have some internet, because UPI payments happen through internet. So mobile phone, internet, Aadhaar card, bank accounts, participants are required to do the payments, merchants are required to take the payments and such. So these are the payment enablers that enable the payment, okay, that initiate the payment, or that are the basic requirements for the payment. Now payment infrastructure, supply side. In the supply side, POS machine, point of sale machine, where your cards will be swiped, QR codes are required, banking correspondence, that is agents are required in some cases, bank branches are required for the digital transactions also, RTGS, IMPS and so. So bank branches, business correspondents, ATMs, POS terminals, QR codes, intermediaries are required. These are the payment infrastructure supply side that helps in the providing of infrastructure for the digital payments, okay. Now payment infrastructure demand side. If POS machines the merchants have, so you require the debit card or the credit card. So credit card and debit card, these are the payment infrastructure on the demand side. Prepaid payment instruments, okay, wallets, the Paytm wallet or the PhonePe wallets that you have, the digital wallets that you have through which you can do the transactions. The customer registered mobile and internet banking, through the internet banking also you can do the payments, as well as the fast tags. So fast tag, the consumers, these are the things that the consumers or the people, the customers have. So fast tag the people have, and in the toll the payment can be taken directly from the fast tag, okay. So these help in the digital payment broadening. These are the payment infrastructure demand side. Now payment performance. How can we know that digital payments are increasing or they are improving or they are deepening? So that is through seeing the volume of digital payments, that digital payment volume has increased or not, digital payment value has increased or not. Previously we have done, let's say, 1 billion rupee of the payments through the digital transactions. Now we are doing 2 billion of transactions through the digital payments. That means value has increased, volume. Before we were doing 100 payments, now we are doing 200 payments. So payment performance or the digital payments have deepened or they have penetrated in the country can be seen through the payment performance, by seeing the volume of the payments and the value of the payments. Unique users, that is the new users, how many new users have started to do the digital payments, okay. Paper clearing, that the currency in circulation and paper clearing, have they decreased or not? The currency in circulation should decrease in the sense that the rupee, that is cash withdrawals that are there, that should decrease, okay. So that is the idea, that cash withdrawal should reduce with the digital payments, as well as the currency or the rupee or the notes in circulation should also reduce, okay. Now next is consumer centricity. Consumer centricity means that the consumer awareness has to be expanded. So awareness and education has to be provided to the consumers in regards to digital payments, that how easily they can do the digital payments with security also. Declines. Consumer centricity means declines have to be reduced, so that, because if more declines are happening, that means there are more problems and the people will be apprehensive in using the digital payments, because they know that their payments are getting declined again and again. So that can create trouble for the consumers and the merchants. Complaints, if there are many complaints, so that has to be reduced. Frauds have to be reduced, system downtime has to be reduced. With that, there will be improved consumer centricity, okay. Now there is the weightage that is given to the parameters. The highest weightage is given to payment performance. 45% of weightage is given to the payment performance, that if the payment performance is improving, that means the deepening and the penetration of the digital payments are increasing, because unique users are increasing, volume and value of digital payment is increasing, cash withdrawals are decreasing. Next highest weightage is given to the payment enablers, that is 25%. Then the third highest weightage is given to payment infrastructure supply side, then to the payment infrastructure demand side, and at last the least weightage is given to the consumer centricity, okay. So this is the idea. Now RBI DPI has been constructed with March 2018 as the base year, and its value is taken at 100. RBI DPI is published on the semi-annual basis, on the biannual basis. and it is released with a lag of 4 months. That's why the data for the September RBI DPI is released in January, and the data for the RBI DPI for the March is released in July, okay, with a lag of 4 months. So this is the basic idea, and the RBI DPI was first announced in January 1, 2021. So this was regarding the RBI DPI, and you can see that the RBI DPI for September 2024 has increased to 465.33 as compared to the March 2024 RBI DPI that was 445.50. Any confusion in the RBI DPI? Now we will move forward with the Standing External Advisory Committee. Any confusion in RBI DPI? Clear? Okay. Now moving forward with RBI has announced the Standing External Advisory Committee. Okay. So Reserve Bank of India announced the names of the members of the Standing External Advisory Committee for evaluating. Now this committee is for what purpose? For evaluating the applications for universal banks as well as small finance banks. What are universal banks? Universal banks are the big commercial banks, we can say, that can provide you retail banking. Like I am going to the bank, I am taking loan or I am doing the deposit, that universal banks can do. As well as wholesale banking can also be provided by the universal banks. Wholesale banking means, let's say EduTap as a whole organization or the corporate is going to the universal bank, and EduTap is saying that these are my 50 or 100 employees and the salary has to be paid on 1st of every month. So that is wholesale banking, that 100 of the employee salary will be released from a single account on one day. So that is wholesale banking. So universal banks can do retail bankings, that is individual for the individuals, or for the corporates, for the institutions. The universal banks can do wholesale banking also. The universal banks can also do investment banking, that is providing the advices to the investors or such, or taking part in the raising of the money for the institutions, corporates. So investment banking can also be done by the universal banks. So universal banks are the big banks that have the capacity to do the retail banking, wholesale banking and the investment banking. Okay. Now small finance banks, they are the differentiated banks, and they were established with the purpose that they are going to provide the banking services in the underserved and unserved areas. That's why there is a certain percentage of small finance banks that have to be established in the unbanked, unserved areas where the banks are not available. Okay, so 25% or such percent is there, that 25% of the branches of the small finance bank should be in the unbanked, unserved areas. Okay, so small finance banks, they provide the small finance, they provide the small loans for the MSMEs, for the small, micro, small and medium enterprises, for the individuals. So small finance bank have the motive, they are the differentiated bank, and they have the motive to serve the unserved and the unbanked areas, and their branches, certain percent of their branches should be established in the unbanked areas. Yes, 25% of their branches should be established in the unbanked, unserved areas. Okay, and they have to provide the small loans to the MSMEs and such. So this is the basic idea. Now the Standing External Advisory Committee, it evaluates the application for the universal banks and the small finance bank. Now Srimati Shyamala Gopinath, former Deputy Governor of the RBI, has become the chairperson of the SEAC, that is the Standing External Advisory Committee. Okay, so remember the name of the chairperson, that is most important. And the secretarial support to the committee would be provided by the Department of Regulation. Why it comes under the Department of Regulation? Why is it not coming under the Department of Payment and Settlement System? Why it is not coming under the Consumer Education and Protection Department? Because here we are talking about applications. Here we are talking about regulation. Okay, so remember that the department will be connected, that is related to the topic only. So Department of Regulation provides the secretarial support here. Why? Because here we are talking about evaluation of the application for establishing the universal bank or small finance bank. If an entity wants to establish the small finance bank or the universal bank, for that the application has to be filled by the entity, and its evaluation will be done by the SEAC. Okay, and the process is not very simple. Process is very lengthy actually. Let me tell you that as per the guidelines for on-tap licensing of universal banks in private sector dated 2016 and guidelines for on-tap licensing for small finance bank dated in 2019, as per these guidelines, first of all, what is on-tap licensing? On-tap licensing that was introduced in 2016 by the RBI. This is like the continuous licensing applications that the entities can send to RBI. So on-tap licensing, on-tap bank licensing facility enables a window for making applications for bank licenses at the RBI throughout the year. That is, throughout the year, the different individuals or the different entities, they can send the application for getting the bank licenses from the RBI. So there is the window that is always open, and you can send the application whenever you want to the RBI for opening up a small finance bank or for opening up the universal bank. So as per the guidelines for on-tap licensing of universal bank that was released in 2016, it was said that the RBI will be taking the application for bank licenses throughout the year for the universal bank. Then on-tap licensing guidelines were released for small finance bank, and the same facility was also provided for small finance bank. Okay, so this is the idea that throughout the year the individuals, entities, promoters, they can send application for getting the bank license. Now it was also stated in the same guidelines, first of all it was stated that first the initial screening will be done by the RBI to ensure prima facie eligibility of the applicants, that they are following the criteria, they are following the net worth eligibility criteria, or they are following some criteria. So initial screening will be done by the RBI itself. Then it was also stated that a standing external advisory committee comprising eminent persons with experience in banking, financial sector and other relevant areas will evaluate the application. So in these guidelines of on-tap licensing, there was the mention that first the initial screening will be done by the RBI, then after that the standing external advisory committee will do the evaluation. Okay, so standing external advisory committee will evaluate the applications thereafter, and that the constitution of the SEAC will be announced by the RBI, and the tenure of this SEAC will be for 3 years. So remember this, that it was written in the guidelines that were released that first the initial screening will be done by RBI, and there will be the establishment of SEAC by the RBI comprising of eminent person, and this SEAC will do the further evaluation of the application. Here also the process does not stop. After the evaluation done by the SEAC, SEAC's recommendation shall then be examined by the internal screening committee consisting of governor and deputy governors, and this internal screening committee's observations shall be forwarded to the central board of RBI that exercises the final discretion to grant in principle approval for 18 months. That means the approval of the banking license, the approval will be given for the universal bank or for the small finance bank, and this approval will stand only for 18 months. Then the RBI will see that for these 18 months, the universal bank and the new universal bank and the small finance bank, were they able to continue their operations, were they able to follow all the guidelines or not. If the RBI is satisfied that yes, these banks have performed well in the 18 months, then only the final license will be released. Okay, so central board releases a in principle approval, that is for the time being the approval was given, will be given for 18 months. Upon the culmination of this period, upon the ending of this period, RBI shall on satisfaction with compliances grant the final bank license, regular license for commencement of banking business on the continuous basis. So this is the idea, that in the guidelines itself it was written that first screening will be done basic screening will be done by the Reserve Bank. Then the SEAC will evaluate the application, and the SEAC's recommendations will be given to the internal screening committee comprising of governor and deputy governor. Then the Central Board of RBI will finally provide the in principle approval for 18 months. After these 18 months have finished, then it will be seen that the compliances were followed or not, and then if the RBI finds it satisfactory, only then the regular license will be given. So this was the idea, okay. And SEAC, the tenure of SEAC will be for 3 years. This is the whole idea. Now coming to universal banks. So universal banks we have discussed, they are the big banks. So the initial minimum paid up voting equity capital, that is the initial minimum paid up share capital for a bank shall be 5 billion rupees. Thereafter the bank shall have a minimum net worth of rupee 5 billion at all the times. So minimum net worth for universal bank is 5 billion, okay. The promoter group or the non-operative financial holding company that has established a universal bank. So universal bank is established by a promoter or promoters that are the establisher of the bank, universal bank, or the promoter group has established the universal bank, or the universal bank can be established under a non-operative financial holding company. So as the case may be, the universal bank can be established under any of these. And if the universal bank, let's say, is established under a promoter group, so they shall hold a minimum of 40% of paid up voting equity capital of the bank, which shall be locked in for a period of 5 years. So 40% of shares should be held by the promoter group or whichever has opened the universal bank, and for 5 years these 40% of shares will be locked in from the date of commencement of business of the bank. The promoter group shareholding shall be brought down to 15%. From 40%, the shareholding has to be brought down to 15% within a period of 15 years from the date of commencement of business of the bank. So for the starting 5 years, there is the lock-in that will happen at the 40%. After that, there will be time period that will be provided that decrease the percentage of the shareholding to 15%. So this is the idea. Now small finance bank, in regards to small finance bank, there were the guidelines on small finance banks that was provided, and there were some changes that happened. First of all, the net worth requirement for the small finance bank is rupees 200 crores, okay, rupees 200 crores. For primary urban cooperative banks, UCBs desirous of voluntarily, if the primary urban cooperative banks, they want to transition to the small finance banks, the initial requirement for them, the initial requirement is 100 crores of net worth that they have to increase to 200 crores of net worth within 5 years, okay. So this is the idea that for primary urban cooperative banks, if they voluntarily want to transition into the small finance bank, initial requirement of net worth shall be 100 crores, which will have to be increased to 200 crores within 5 years from the date of commencement of business as a small finance bank, okay. Small finance banks, incidentally, the net worth of all SFBs currently in operation is in excess of 200 crores, and small finance banks will be given scheduled bank status as soon as they start the operations. That means all the small finance banks will come under the second schedule as soon as they start the business. Small finance banks will have general permission to open banking outlets from the date of commencement of operation, so they do not require any separate approval from RBI to open their branches. They have the approval, they can open their banking outlets. Payment bank, if they want to convert into small finance bank, they can apply for conversion into small finance bank after 5 years of operations if they are otherwise eligible as per the other guidelines. So these are the requirements for the small finance bank. Any confusion anyone has? Any confusion anyone? So small finance bank, the minimum net worth is 200 crores. The primary urban cooperative banks can transition into the small finance bank. In the initial phase, they require 100 crores of net worth that they have to increase within 5 years to 200 crores. The payment bank can also transition into the small finance bank after they have completed, after the payment bank has completed 5 years. Okay, so these are some of the basic ideas regarding the small finance bank. If there is any confusion, kindly ask me. All clear? Okay, now before starting with the MCQs, before starting with the questions for today, let me show you, this is the EduTap's website. If you go to edutap.in, you can go to EduTap's website where you can get the free material, that is the blogs that are provided to you for the exam information to know completely about the examination. So if you want to know about this exam information, if you want to know about the strategy, if you want to know about the success story, that how the toppers achieved their dreams, so it is very nicely written, everything. So in all categories, let's say you want to know about the exam information for RBI Grade B, let's say you want to know about the strategy or for the success stories for the RBI Grade B, and everything is provided in a very nice written format, so that you can read the success stories or you can read the strategies that was adopted by the toppers, and you can read the strategy for the different components that you want to read. So the whole of the exam information or the required exam information, strategy and success story is provided through the blog section in the free manner. Okay, and if you want to check out the courses, EduTap's courses, let's say you want to check out the EduTap's RBI Grade B courses, so all the information is provided here. Like if you want to get the test series, silver course, if you want to get the gold course, so what is the price, what is the off that is going on, and what all you will be getting in the course, all of this will be provided in the website. Like all of this you can see in the website, and whatever you will be getting in the course, you can read here that what all you will be getting. Okay. Okay. So once an SFB becomes universal bank, yes. See, there was the requirement recently, like a few months back, there was the voluntary transition of SFB into universal bank. So this was the direction that was released by the Reserve Bank of India, that the small finance bank can voluntarily transition from the small finance bank to the universal bank. Okay. So as per those requirements, there was the requirements that was laid down. I will have to go through it again and will be able to answer you then, but there was the complete directions, and I have taken a session on this. There were the complete directions that were released for the voluntary transition of SFB into the universal bank. So yes, the SFB can transition into the universal bank, and there are some norms that have been laid down. Okay, so I will share the link with you so that you are able to recall that what are the requirements. But there is the guideline released by RBI regarding the voluntary transition of small finance bank into universal bank, and small finance bank has to follow those directions given in the voluntary transition direction. Okay, so this is the idea. Now this is the first question. I hope you all will be able to answer this question. Here in this question you have to tell the incorrect statement for the RBI DPI for September 2024. So try to answer these questions. Okay, now this is the second question. I hope this is a very easy question. You will be able to answer this. Okay, so if the small finance bank want to transition to the universal bank, there are the guidelines that have been released by the RBI with the name voluntary transition of small finance bank into universal bank, and I have taken a complete session on this topic also, so you can see that also. I will pin the link for this session. Okay, so this is it. Thank you very much for joining the session. If anyone has any further queries, they can share. Yes, Sorish. There were the voluntary transition, like you can also type voluntary transition of small finance bank into a universal bank. So there were complete guidelines that were provided, that for like after how many years of operation, after how much of the net worth, and all these criterias were given. So I can see that there is no further query. So thank you everyone. Thank you for joining. See you in the next session. So next session will be on Saturday. Okay. And let me tell you that the payment system report has also been released. So this session I will take next week. Okay. Because this is a lengthy report and I also have to go through this whole report. So next week I will take the session on the payment system report. Okay. You are most welcome, Sorish. You are most